In case you haven't noticed, stock market crashed on last Friday. S&P 500 was down by 0.9%, which is still not too bad, but Nasdaq or QQQ was down by 2.1%. The last time QQQ dropped more than 2.1% was 6 months ago, when it dropped by 2.5% on 25th of October. If we look at the individual stocks, a number of technology and semicon companies dropped significantly. Supermicro crashed 23%, ARM Holdings crashed 17%, Nvidia dropped 10%, Netflix dropped 10%, and AMD dropped 5%. So what happened to these technology and semicon companies? Is this a temporary dip or is the bull run over? Let's look at some of the macro development. Last Tuesday, Jerome Powell said, and I quote, "More recent data shows solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to the 2% inflation goal." Just early this year, market was expecting 6 rate cuts this year. Now it is down to only 1 to 2 rate cuts. And based on the CME Fed Watch tool, market is pricing in 3 rate cuts from now until April next year. So if US inflation remains sticky at 3% and not coming down to 2%, US Fed will continue to hold rate high, and this is bad for stock market. Stock market tend to do well under high growth and low inflation environment. It seems that now the US growth rate and labor market remain healthy, but inflation is still too hot to ease the monetary policy. Next, let's look at why the semicon stocks hit badly. Over the past week, 2 semicon companies reported earnings. ASML beats the earning estimate but didn't beat the analyst estimate on the revenue. The new bookings number is also worse than expected. TSMC double beats on earnings and revenue, but the share price still dropped after the earnings release. The main reason is that TSMC has revised their outlook for 2024. I quote this statement from the earnings call from CC Wei. "Looking at the full year 2024, macroeconomics and geopolitical uncertainty persist, potentially further weighing on consumer sentiment and end market demand. We thus expect the overall semiconductor market, excluding memory, to experience a more mild and gradual recovery in 2024. We lower our forecast for the 2024 overall semiconductor market, excluding memory, to increase by approximately 10% year over year, while foundry industry growth is now forecast to be mid to high teens %. Both are coming off the steep inventory correction and or base of 2023. I know that there's a lot of hype in these semicon stocks lately because of the AI development. TSMC is definitely one of the beneficiaries towards the AI trend. However, we need to remember that TSMC still have a very sizable business in non-AI sector, mainly smartphone market, and smartphone market hasn't really picked up in the first half this year. For example, if we look at the 3nm process node, currently I think only Apple is using the 3nm for their iPhones and M3 chips for Mac. The percentage of wafer revenue for 3nm has dropped from 15% to 9%. I think this one signal further weakness in overall smartphone market, and Apple is definitely affected by this slowdown. Good thing is that Apple is not going to monopolize the 3nm process nodes. Both Intel and AMD already announced that they will be using 3nm process node from TSMC in their upcoming products. So stay tuned for the new products launching this year. How does company like TSMC navigating the current environment? One thing I noticed is that they have been communicating for a few quarters that capex will be kept low. What that means is that there will be more free cash flow that TSMC can distribute to shareholders. They are reaping the benefits from the investment that they put in from a few years back. Talk is cheap. Let me show you the free cash flow chart from TSMC. Prior to recent 2 quarters, the free cash flow averaged between 2 to 3 billion US dollar. In recent 2 quarters, the free cash flow was 7 to 8 billion US dollar. This is good for the shareholders. It's just that if you are looking for high growth in 2024, you may be disappointed, but I'm patient to continue to hold and reap the benefits over the long term. To conclude, I know that stock market corrections is always painful, especially if you are concentrated into a small number of stocks. Sometimes we can have conviction or even fall in love in the companies that we follow closely. But the market doesn't really care about our convictions. Market will continue to do its things. Sometimes market is correctly predicting the direction of the company's fundamentals. Sometimes it can also get totally wrong. It is hard to generalize that every dip is a good buy. What we can do is to have a plan, have an asset allocations that is not so extreme, diversify your investment, keep some cash for liquidity needs, and also help to improve your emotions. Hope you enjoyed this video. See you in the next one.